Alrighty, let's do it. All right, welcome everybody. Thank you for joining us here today and our final in our series of the Home Buyer Webinar Series here presented by Better Homes and Gardens Real Estate Destinations. I am the broker Jaclyn Kelley, and today's topic is on insurance. This is a hefty topic. And we're so delighted to have an industry expert here with us today, Gabriel Sanabria of Insurance Connection of South Florida. Thank you for being here.
No, thank you. I appreciate the opportunity.
Yes, awesome. I'm looking forward to a good conversation. And Erin Kiel, our panelist today, for our agent at Better Homes and Gardens.
Hi.
And hi. I'll go ahead and give a quick announcement too to the rest of our committee members. I'll recognize them who did so much work in putting all of these webinars together. Erin Kiel, super instrumental. Ada Rodriguez was really big on getting today's together. Karen Williams-deCastro, Ocean Hamilton, Stephanie Camacho, and Jana Pratt. We have been busy doing this. So hopefully you guys all find this useful. Our goal here today is to empower you with education to help you reach your real estate goals and become a home buyer. And even if in today's is going to be really beneficial, also if you already are a homeowner, you might learn some tips and tricks on how to lower your insurance premium. I know I've helped countless homeowners do that didn't know about things like the 4-point inspection and the wind mitigation report that can really lower your insurance. So hopefully you find some empowering ideas here today. And we'll look forward to hearing from you as well. Feel free to put your questions or comments in the chat, and I will read through those at the end. And I just want to say that we are located in the Florida Keys, and we cover real estate sales and property management in the Florida Keys and in Miami-Dade County, sometimes in Broward too, or wherever our clients need us. But this information you'll probably find useful throughout the state of Florida and maybe even in other locations that you're at. Real estate is very hyper local. So just keep that in mind that some of it is going to be really, different from where you're based. But thanks for listening and tuning in, and hopefully talk to your local insurance agent and your local real estate agent and see how this information works for you where you're located. So, all right. Well, without further ado, let's hop on into this hefty topic of insurance. Let's see. Today we are going to discuss a lot of the changes that are happening. Future flood rate maps. It's always a very changing landscape. So I'm excited to give a little bit topic, how that impacts how hurricanes impact us and so much more. So I am actually going to go ahead, I think, and pass it on to Erin without further ado here, and she will be interviewing Gabe. So take it away, Erin.
Sure, thank you. So I'm going to introduce Gabe in just one second, but I just want to also touch on, we've kind of gone through our webinar series talking about how instrumental it is to have a local real estate professional to help you during the transaction when you're buying and selling. But, we do so much research up front to try to obviously help you along the process, but also with insurance, there's key things that we're trying to find so that we can get an idea of what your insurance might be. We're not the experts in insurance, but we do know, obviously some information about it. And we're really right away trying to figure out if this is a property that's going to fit, within your guidelines for how much you want to spend on insurance or what your financing says. And so again, it's instrumental in having a local realtor to help guide you and also connect you with other professionals that answer their call. They know what they're talking about. They do this day in and day out. And so that brings me to Gabe with Insurance Connection of Southern Florida, which is a family-owned and operated insurance agency. It's actually located in Key Largo, but Gabriel, are you able to serve all of Florida?
Yeah, my brother started it with my dad 20 years ago.
Wow.
I joined 10 years ago, so I only have half the experience he does. But we work together really well.
No,
Definitely,
you guys are awesome.
We're like in probably the hardest part in regards to insurance. So I could say pretty much being in the hardest area to insure has definitely made me better because we see stuff that other areas don't. So for sure, we do other parts of Florida. And then whatever information I'm going to share here pretty much is going to be a big help because down here in the Keys, the issues we've been dealing with for the last 5 years are now creeping up into other areas. So now, like you guys mentioned, the 4 point, the wind mitigation, all those things where some agents wouldn't even quote it with that, I would say 5 years ago. Now, because the premiums are higher, it's pretty much they need it to keep the
Right.
business.
Right.
So
It's
now it's just so
necessary.
much more important to have all
Right.
those things.
Gotcha. Okay. Well, and I also just wanted to mention too, they are a full service insurance agency, so
Yeah.
they do things beyond residential insurance, but we are going to focus on that, of course, today as we're talking to you guys home buyers. And you know, like I said, they answer their phone, which is really important, the customer service aspect, but we all talk to each other. So I think sometimes people don't realize how much their realtors are kind of connecting everybody. So we're connecting you to insurance companies for quotes. They're also, they need to be connected to your lender if you have financing and to title agency. So, or your closing agent. So we know the timeline. So we're all woven together and we all have to have excellent communication, which not everybody does. So it's important, you know, to find somebody that you trust, and then we can send you our local affiliates that are also hardworking like us. So
I could
without
agree with
further
that.
ado, yes, absolutely. And Gabriel and Michael have been awesome, so great with customer service. But yeah, let's just get into the basics. So we mentioned, you know, we threw some words out there like 4 point and wind mitigation, but like I mentioned, this webinar has been geared more towards a new buyer or a buyer that just doesn't buy property, you know, all the time. So can you break down the types of insurances that are required for buyers who do use financing to purchase a residential property in Florida? And then if there's any differences when they're buying condos.
Yeah, so pretty much you're going to hear a lot probably from the lenders in HO3. And HO3 is just a standard homeowners form that provides, certain types of coverages. And then each company, tweaks it a little bit. But that's the standard policy. And then pretty much the main parts of the coverages are going to be your dwelling. That's going to be, for the actual structure. And then you got personal property, which is another big one, your personal items. So when you buy the house and you put all your things in the U-Haul and you drive and organize everything in the house to make it your home, that's going to be pretty much all your personal property. So that's another main part of it, because you want to ensure those things that because a lot of people could have $50,000 to $100,000 in items, and sometimes you don't even realize it. And then another part is going to be the liability, protect you for slip and fall or whatever negligence from your residents that causes bodily injury to another person. And that's really the main parts of the homeowners. On the condos, it's a different form. It's called HO6. So that means the condo covers the outside. Your policy covers the inside part. So the lenders like to call it walls in. So everything inside structural. And then you got your personal property as well and liability. So those are the main differences. One thing I wanted to mention on this part was for lenders on the homeowners, regular HO3 for houses, you're gonna need to have windstorm and flood. We mentioned that down here a lot because those are the hardest things to cover usually and the most expensive part. For condos, it really depends on your lender if the windstorm is required. Flood is covered usually by the condo association. Windstorm, it's really up to the lender. So then just make sure you ask your lender if that's required or not.
Can I stop you really quick 1 second? Okay, so can I reiterate? So in order for you to be able to carry a homeowner's policy, an HO3 policy, they do also require you to carry your wind and then thus potentially flood as well.
Yes, correct.
Okay.
And
Okay.
on occasion, that could be, you could package the home and wind together in one policy depending on who you're using and where the location of the house is. And the Keys, all the real estate agents know, we got to go with citizens. And it's pretty much, we prefer doing the wind only, and then the homeowners that doesn't have the wind. So then you're going to need those three policies to, have the suffice the requirements of the lenders.
Gotcha. Okay. And then we talked about the 4-point and the wind mitt and how the realtors really, it's our job to kind of research and get you any information you need so that you can start the quote process, understanding that we still need, a new and updated inspection report, wind mitt and 4-point. But can you kind of go into those items, why you need them, what's on them, in order for you to start quoting?
Yeah, so the 4-point is going to be, make sure that the electrical, heating, plumbing, and roof are in satisfactory condition. And then it's going to tell us the materials that are used and if things are working. But it's like a basic form. And then another thing is going to tell us when it was last updated. So it's definitely important to make sure that the inspector gets all the documents they need to show, because if he didn't know that the panel was updated in 2000, he's going to assume it's original.
Right.
So making sure that the inspector has everything he needs to be able to update it properly. And that way we can have the best chance at getting the best premium and then the best company with the best coverages.
Mm-hmm.
And
so
then,
for
go
example,
ahead.
I'm sorry to cut you off, but so for example, like you said, the electrical panel, I mean, obviously he should be able to see it's been updated, but let's say there's a permit that he missed and we're able to find the permit. We can provide that to the inspector and be like, this is the permit. It's been closed out. It was updated
Exactly.
in 2018.
Or like if
And
there
then he
wasn't a
can,
permit, but they have a receipt, the seller has a receipt that they changed something, then, it's up to the inspector, but most
Mhm.
inspectors will, honor that because they have the
Mhm.
receipts
Right.
and the proof. And we see that more like on the water heaters and like if there was a plumbing fixture that got updated, or the sewer, but for some
Right.
reason we can't find the information, then any receipts could be used as well.
Gotcha. Okay. And then I think you were getting into the wind mitigation report.
Yeah, so the wind mitigation, I usually, like I tell you, real estate agents, is that before we even get to that part, just check the house when you're doing the walkthrough and look for an attic. If there's an attic, you're probably going to get most wind mitigation credits. The other thing is the realtors also will help you with getting checking the permits for the roof, which already is another discount. So before we even get to that part, you already have a better idea on if it's going to qualify or not. If the roof doesn't have an attic and it's pitched, doesn't mean you can't get the discounts. It just means it's probably going to be a lot harder, and the chance you have at getting those discounts is going to be a lot less compared to a house with an attic. And
Yeah.
unfortunately, that's just something we see a lot.
We definitely went through that together recently with a house that did not have an attic, and there's so many of them, at least in our area. I feel like probably
Yeah.
in Southern Florida and Florida also, but and one of our awesome property managers was able to kind of access light fixtures to get inside and see like how the roof was actually attached. And so again, we all work together with the inspector and then back to insurance to provide those discounts, right, for the buyers.
Yeah, and then and it's not a lost cause if it doesn't have it, because some people are like, look, I need to get the house, or for whatever reason. I try to help my client even afterwards, and to be able to, see what we could do. I usually tell them, talk to the inspector, see where you think he could get access to see those nails and straps and all that information that he would need to put it on the report. So that's one thing, it's never a lost cause. But sometimes they go in and it's not a guarantee there's going to be something in there. Sometimes there's no straps for whatever reason. So it's just, the final report will tell us what everything has. And that's the best way to get all the discounts.
Right. And if let's say you aren't able to get the discounts that you want, but you have potential to get them, for example, the roof, your financing is fine, so the deal can still close. But after you close, maybe then as a buyer, you own the home, you're more comfortable opening a hole in the ceiling, versus the seller having done it or whatnot to be able to get those
Exactly.
credits after.
Exactly.
And
And
then
we,
you
mhm,
can still save money, right? So you don't have to pay like the
exactly.
whole
At
year.
any time they want. I've had clients that forget, and I emailed them a year later saying, "Hey, by the way, we had a
Oh my
conversation a
gosh.
couple years ago, and you said you're gonna get the windows. Did you get it?" He's like, "Oh yeah, I forgot to tell you that." I'm like, "Well, okay, well let's get this."
Let's
They're like,
save you
"Oh,
some
thank you for
money.
reminding me."
Oh my gosh.
So
Yeah, that's
yeah, it can be
crazy.
done anytime. So
Okay.
that's definitely
Because I
help.
know some buyers are, they scramble to try to get it done before closing, but really, you should know that as long as your financing, your lender side works out okay with that insurance amount, then you can do it right after closing
Yeah.
and still save money.
I had one
So,
the just happened today. She had a shingle roof. It didn't need to be replaced, but I had already told her that, look, if you replace it, you're gonna save about $3,000 a year. And it only
wow.
cost her $9,000 to do it. So for
Yeah,
her, it was a no-brainer to go ahead and
absolutely.
get the roof done right away. And then that didn't even include the impact windows she's gonna finish up soon. So
Yeah.
definitely, that's always something I advocate for in regards to just trying to update your property to maximize discounts and also not have the headache of ever having to make a claim in the future because you don't want to. It's not a bad
Right.
experience, but it's not
Yeah.
something,
A
nobody
little more
wants to have damage
stressful.
on their
Yeah.
house.
Yeah. And you're saving money on utilities, you're saving money in general. So all good stuff. Another thing that we try to find as realtors is if a property has had a recent elevation certificate, how helpful is that when we're talking about flood insurance?
Yeah, that's definitely helpful. It really depends. The FEMA has definitely changed the rating system where it gives you the best rate regardless, but it doesn't always pull the information from the elevation certificate. So it's always, you know, beneficial to get it, even though I can't guarantee you it's going to go down, but it's going to give us the best chance to bring it down. It could go down from 3,000 to 1,500. 1,500 is probably the what I've been seeing lately for some of these. Um, but it really depends on where the house sits, and
Mhm.
that's a more in-depth, I think, though, conversation. We'll have a
Gotcha. Okay.
little.
Yeah. Yeah. Um,
I
well,
want to
and
go
so,
back a little bit.
sure.
I think we missed the little part that we wanted to talk about.
Sure. Yep.
Just because you did mention the 4 point, getting the 4 point in the limit. Just some other stuff I usually need. That way, people who are purchasing could know what the agent needs right off the bat.
Hmm.
We need to know the name of the buyer, and then if that buyer is going to be purchasing it in their name or an LLC. Not every company accepts LLCs, so that's the reason why it could change a quote or change a coverage. And then the next thing will be the occupancy, if it's primary, seasonal, or rental. And then not because not every company accepts prime or seasonal, or not everyone accepts rental. And then of course the property address, and then pretty much that's like the bare minimum. I normally, me personally, some other agents like to ask for more, but I like just to get that to at least work the quotes up. And then if the client gets their offer accepted, then what we do is they let me know, and then I just ask for some more additional personal details that we have to get to firm up the quotes, and then that's when we get the inspections, and then the quotes are pretty much good to go after that.
Gotcha. Thank you. Forgot about that part.
Mhm.
And we have so many investors, down at least in our local area. In general, does that insurance does it increase when you're not using it as a primary?
So right now with Citizens' new non-primary rates, it is a yes. Because could change in the future, but we really don't know. So for the windstorm, you're definitely going to get hit with an increase. But, you know, short-term rentals make a lot of money down here.
Sure.
So
Yeah.
I would say most of my
Part of
clients, that are doing short-term rentals, or they consider short-term anything under 9 months. It's, most of them, they're
Is
just,
that right? Insurance companies consider anything under 9 months to be
well,
short-term use.
citizens. Yeah, citizens
Okay.
mainly, because that's the one that makes most of the difference in price. The other ones we're talking about surcharges of $100-$300 a year. It's nothing crazy.
Not bad. Yeah.
It's more the citizens where we're looking at like 45% right now, but that's where some people are having to choose, okay, do I keep doing the short-term rental, or do I rent it annually where I can save myself the 45%? So at that time, like our clients that are renewing right now, we're having these discussions with them. So either keep doing the short-term rental game, or you just got to go to annual and then save yourself. But
Sure.
like I
Yeah.
said, most people are making a lot of more money, so to them it's like it's not a big deal.
Yeah, but no, to have that thought process, we had a webinar a couple weeks back for it was investments, for the first time investor or somebody that really wants to get into the investment game and build their portfolio. So to your point, just trying to, to be able to think on your feet like that. Okay, I started out as a short term, but I need to be, flexible enough and consider all the costs. Maybe I transition to a midterm or a long term and, save some money, and that's a savvy investor.
Yep, that is.
Okay,
Gabe,
so
really
go ahead.
quick, can I ask on that? Did you say it's going to be an automatic 45% increase for the short-term rentals from Citizen?
Yep,
Wow.
that's what I'm seeing right now. On our renewals since December of 2023, we've seen an increase. But most people either they're making us verify all of the policies, unfortunately. So it's a lot. But most of them are being verified by the homestead exemption. And then when it's an investment, it's a rental property, they're just telling us to get the lease. So then most clients are working up a lease because they had a handshake deal or they had a lease. So then we just get that information, we have them sign some documents, and then once we submit it, it gets approved. Citizens removes the rate increase on their renewal.
Good to know. I did not know that.
Yeah.
Good info.
Yeah, it's a little bit new. It's still fresh. Not everyone has seen it. We haven't done the cycle yet, so
interesting. Okay.
That's definitely something we're going to touch on in a little bit, is what you're seeing, as a professional on that side of real estate, the trends, the latest news, the things that are changing. So, but can I ask you a question about, I've talked to you about this before, and we don't have to get in too deep, but for back to flood insurance, a lot of agents, when they're marketing a property to buyers and to other agents, they said that their current seller has flood insurance and it's assumable. Can you just really briefly talk about what that actually means?
Yeah, so the insurance companies definitely are using that word assumable. So the policies are assumable, yes, which means when you assume it, you're assuming the same policy number. You're assuming the same policy. You're assuming the same effective dates. You're assuming the same coverage. And then once it's assumed, the only difference is that now it's going to be in the buyer's name. So, but as we've discussed before, we no longer have to do that. FEMA and FIP, they've updated where they allow us to, I like to call it transfer. So we could get you a new policy, but it's going to have the same benefits as what the seller had. But we don't need to keep the effective dates, keep the policy number, you don't even have to keep the same company, because some of them, they get stuck with whatever random company, and it's sort of hard to move away from them. I prefer to just use a company that everyone uses. So even if it's not to my benefit, if a client wants to move, it's easier for them to move because everyone has that company. So
Mhm.
not everyone shares the same company. So I like using Right Flood.
Mhm.
They're easy to work with, and they're good, and they service the policies well. So when I transfer those benefits to the new buyer, the only differences is going to be there could be a price difference, but the reason being is going to be the coverage difference and the occupancy difference. Let's say the seller doesn't have contents, personal property, but the buyer wants contents, wants personal property. If you were to assume it, you would have to wait until after you do the whole closing to then call the flood company and then tell them to change the policy. Whereas if we just do it the other way, just transferring it over the benefits of it, you could just write a new policy the way you want it from the beginning. And
Gotcha.
really that's what we advocate for. It's a lot easier for everybody. It's the title companies don't get mad at us because they have to do calculations if they assume it. It's a little bit difficult for them. So it's everyone
It just
likes it,
seems to make more sense anyway to get your own to transfer the benefits, but
Yeah.
have the dates changed to be better for your situation.
And you don't necessarily need to transfer the benefits right at closing. The assuming part has to be done before closing. Let's say they sold the house, well, they bought the house 6 months ago, and the, the flood policy from the seller happened to be at the 6 months. But, the buyer forgot to get flood. But now he wants it because he remembered he had to get it. Even though it's been 6 months, we could still go back and assume the benefits of that policy within 1 year.
Okay.
So that was a new thing that they told us recently in a meeting, that we could up to 1 year. So, they still have time to decide, even if they bought it cash and they didn't want flood initially and then they changed their mind, they want it, you could still benefit of the better pricing.
Gotcha. Okay. And yeah, a lot of this is like we were just talking a foreign language to a lot of us. And that's why you go to the expert, somebody like you, to kind of help them break it
Well,
down
let's
and
actually, I forgot
understand
to
it.
mention, why do you want to assume it? So the
Okay.
reason being is that the price is better. So
Right.
if I were to do a brand new policy, it'll be $4,000. But if the current seller is paying $1,000, we could get, like I said, if you want different coverage, it'll still be a little bit different, but it'll probably be 1,100 or 1,000, almost exactly the same as what the seller
Mhm.
has.
You're assuming their benefits, right? You're
Exactly.
assuming the
And then
benefits
you'll
of a new
see
policy.
in the premiums, there's a discounts on there, and it'll be noted in that section.
Gotcha. And then so for somebody that just, hasn't dealt with insurance, how do you can they just ask you all the questions? Like I'm sure it could take forever to explain, every line of these things to a normal person. But it seems like you explain it pretty nicely, but just how do you explain it to somebody that like how do they determine how much coverage they want? Do you go through with them step by step and kind of break it down so that they can better understand?
Normally, it's not what they want in regards to the coverage amount. The only one they really want is going to be the liability and the personal property. And then
Mm-hmm.
usually I just make certain recommendations on what's needed. And, if I see like on condos, I always try to push special A coverage. It broadens the coverage of the policy. But in regards to like coverage amount, we put in the characteristics of the house, and I have a little bit of knowledge about construction, so I use that knowledge as well to be able to put the information in the replacement cost estimator, and then it's going to give us a replacement cost for that house. It could be skewed a little bit. It's not an exact science, so it could be adjusted, but usually it gives us a really good indicator on where the coverage needs to be. So
Gotcha.
then I use that and then usually there's percentages for the rest of it. And then I just quote everyone the same and then tell the client, hey, this is what I quote for everyone. Let's have a conversation where we could talk about what you might want or not want. And then
It's a starting point.
exactly.
Gotcha. Okay. I just think it can be scary for people who just, don't do it every day. So it's nice to know, you just need the right person to help you break it down and understand it.
And like you guys, you guys send people over all the time, and I really appreciate that because sometimes I prefer them to talk to me before they're even getting to that part. That way I could tell them these things beforehand, and then that way they're a little bit more educated on what to look for and then what to
Absolutely.
do. And then they have a better understanding. That way when we have our next conversations, they can make an educated decision best for them.
Absolutely. And I think people or buyers might get scared to have that conversation because it's like everything's real. It's the same that we want you to have that conversation with a lender, like before we even go look at
Yeah.
property, right? So you kind of know. You also really want to have that conversation with your insurance company, because especially down in the Keys, I mean, wood frame home, concrete home, metal roof, shingle roof, old roof, new roof, it can change a lot, when you're talking about your insurance. So that's a great suggestion to talk to and connect with you guys immediately before you're even looking.
I think when people are in this stage, they should look at their insurance not as just their insurance agent, just as an agent that's going to shop it, but like an advisor to just tell them what they need to do. And that's the approach I'm trying to take more often. And I've gotten hundreds of people now that just call me just for advice. And I've told people, like, I tell them the bad news sometimes. Hey,
Sure.
you can't insure this $10 million house unless you want to spend 500,000 a year or something.
Right.
He doesn't like that conversation, but he appreciates the information that I'm giving him because I'm not gonna just tell him, yeah, get a quote and waste his time.
Of course.
So having those conversations beforehand is definitely helpful to, make sure, everyone knows what they need to know.
Yeah, save a lot of time. um Okay, I think we kind of talked about the basics, really. I'm going to get into some hot topics. Jaclyn, did you have any other kind of like basic questions about insurance before we get into some kind of trendy buzzing topics?
Well, no, I mean, I've come up with a few just listening to the conversation. It's, great information, and it always makes me think when I hear stuff like this. But different questions were popping up, like you mentioned the roofs, old roof versus new roof. And I think it's an important topic to discuss, that there's a roof life expectancy, and sometimes, and also for all of the 4-point mechanical items, basically, if they go over a certain age, the property might not be insurable at all. Is that right?
Yeah, in the most cases, I would say, yeah. There's a couple tricks we have. I could try to push it through, but definitely it's not a cheap fix. It's going to be an expensive one, which means replacing the roof. So if you're willing to dish out an extra 10 to 20 to do that, to push the deal through, it is possible. But yeah, in most cases, it's going to be, if the roof isn't in good condition, it's pretty much a no-go.
Is there a cutoff for age?
Yeah, 5 years for citizens.
Needs 5 years left on the roof.
Yeah, 5 years of life left.
Yeah.
That's basically going to be only shingle roofs or flat membrane ones. Metal roofs, we never see that issue with metal roofs unless there's like really bad rust or something. So definitely, I'm always an advocate for pushing towards metal.
Same.
Jaclyn and Erin have lived here long enough to know that with all the storms we've seen, how much metal roofs have actually been damaged in a storm. So
very little. Sometimes a little bit will peel up, or if a tree falls on it or something.
Yeah.
But
so they know that just to keep your house protected, having a metal roof is honestly the best option, because with the shingles, you're gonna have to be replacing shingles every 5 years.
Yeah.
And tiles, same situation.
Well, and that goes back to like what you said earlier about, making the improvements on your home and how important that is. And, when we live in our homes, we get comfortable with it a lot and we just kind of let some things go like that. And it's a major improvement. I mean, 10, 15, sometimes $20,000 out of pocket for a new roof is, is a lot of money. But if you do it, as you see your insurance costs rise, or if you know that it's getting older, or if you know you're going to sell soon, it's worth it sometimes to go ahead and invest and make those upgrades so that it's insurable and the buyer can, or even if it's not, that is that old, but the buyer will get the discounts and it's good for resale value. Oh, this one has a new roof. I know I'm not going to have to replace that for the next, 27 years. So, all those things, and then it pays for itself in just a couple of years with what you save on insurance. So.
Exactly. And then back to life expectancy. The hardest part is just for the windstorm. The other policies like without windstorm, the newer it is, the better chance we got a better price. I'll give you an example. The inspector put 2020 the other day, but it was like a membrane or a paint. And then the company, Florida Family, was just like, look, we're not going to put the 2020, it's going to be original, but it was concrete. So like the policy is still active and it's fine, but he has to pay a surcharge of whatever, $100. So it's, it's always better to have a bit newer. You're going to get the best pricing. In that case, there's nothing you can do because it's concrete. But, when you have a metal roof and there's an age difference, it's also beneficial. And then some companies like Florida Family, when it comes to shingle, or like Security First and some of these other ones, they're going to have a limit on the shingle roof. So even if there's 5 years left, if it's over 16 years old, it's not going to be accepted by them. So then we have to go to other companies. So a company that'll already know it's going to work for this roof. So, and that's where like the 4-point helps, in regards to pricing. It's not necessarily gonna give you the discounts, but I see it more like for eligibility. So the 4-point's gonna give you eligibility for certain companies. And then if you're eligible for more companies, you got more competition. More competition means better pricing. Right. You got all the same companies trying to fight for your business. And then, you got better options.
That is great info. And, sometimes we'll get clients that, a lot of our clients are from out of the area and they might be coming from New England or the Midwest. And they typically have concerns about insurance and hurricanes, and that's always a topic that we go through in the home buying process when they're considering here. And when they're concerned about it, you covered on this a little bit earlier too. When you're working with a local agent, they can really help you determine right away if this is going to have relatively high or relatively low. Not that we'll ever be able to quote insurance. I don't even try, but yeah, there's so many strength and safety features. We kind of know what Citizens is looking for, and a lot of these underwriters, they're looking for a strong house. Our building codes here are some of the strongest in the country. So when the home is built right and has these upgraded features, your insurance really is pretty reasonable. So you just got to have all those right things. So when somebody comes,
that's a good point. I try to use my house as an example because my house is newer. It's 2020 built. So, and it's not like, it's a 3.2, so it's a normal size house. But I always use my house as an example because I know off the fresh top of my head, I pay $3,000 plus $800 in flood. So I pay $3,800, which is really, really good price normally.
Yeah.
Windstorm is $2,200. So,
wow.
But I always tell clients, like, okay, use my house as an example. You could buy a new house and it might cost you more money, but you're going to be saving probably $400 a month on insurance. Because if you go with an older house it might not have certain discounts. And regardless, it's going to be more expensive than older house. But, the risk of also the lack of discounts could just make it skyrocket. It could be easily $10,000 a year. So then I tell people to weigh that option as well with their realtors. That way they could see, okay, do I spend 50,000 more and get a little bit of a newer house, but I'm saving on insurance, and then it might even come out cheaper.
Yeah. And sometimes that insurance cost, if you're looking at an older house like that, you think, if it is significantly less, let's say it's, 450,000, great, I can afford this house. But you really need to take into consideration what the insurance cost is going to be, because that could throw your deal if the buyer is already close to their income to debt ratio. And that's where it's important from the beginning to start talking to your lender and know, because when they pre-qualify them, they'll say, okay, you can afford up to a $450,000 home with insurance, and they'll give a little budget in there. Your taxes and insurance can't be over this amount. So then we go back to looking for those strength and safety features that will help if it has a newer roof or impact windows. And something that I've learned over the years too, and have helped some clients get, is that there are, if you are really tight on that, there's options to be able to do some of those upgrades either before or after closing. But there's tax credits sometimes to help, offset those. There's tax credits for impact windows. You can get a little bit of money back there. Are you familiar with
There is a program, since you're talking about that, there is a program with Florida about they'll pay a certain percentage of the upgrade for mitigation credits. So, for example, they'll throw in maybe secondary water resistance if you do X, Y, and Z. It's not the best thing because it's a little bit expensive because you got to go through certain steps. But at least, like you said, there's certain things you could look at that might actually be beneficial in that situation.
Yeah, and there's grants, and there's even some zero income loans. I had a client get all new impact windows with a zero interest loan for doing those upgrades. So there's a lot of different programs out there, and I mean, in my opinion, it's really worth it as we're talking about this, how much it can save you. So if you are looking at an older home, don't get scared of this conversation that your insurance is going to be too high, because there might be some options, but you'd really want to look into those beforehand and talk with your real estate agent and your insurance agent to see if there's some options there that can help you get those costs down by maybe some programs like that. Also, the deductible is something you can play with a little bit. You talked about that a little bit earlier too, with your customization that you like to do with their phone conversation with them. And
I think one of the things that I had mentioned here on my notes was the best way to bring it down is going to be the mitigation credits or any other things they could do to bring it down. That's the first step I usually tell clients. Next one is going to be adjusting your deductibles. Sometimes it's a little bit zip code, depending on the zip codes, different deductibles act differently. So depending where that is, the house and the keys, usually it's the windstorm one. In Miami, it's more the all other perils because there tends to be more water claims in regards to pipe leaks. So depending on where it is, I will discuss with the client, okay, look, we could adjust these deductibles and it'll do this. And then after we reach that point, if they want to adjust some coverages, they could do that as a last resort. If we really need to get in, to be able to qualify, then that's usually the route I take with them. I think it goes back also what Erin said, having a good communication about these things. That way I can, or your agent could help you.
Yeah, absolutely. And, being on top of things and getting those quotes, we always try to get our customers connected with you guys or an insurance company during the inspection period. So that way you can get a realistic quote, because sometimes the lender also will put a little buffer in there, a little number, but it doesn't always equal what it actually is going to be. So I think it's really important always to have the conversation with the insurance agent, show them the house you're looking at. Yeah, even if you don't have your mitigation report back till the 11th hour of your inspection report or inspection period, start the conversation, let you guys do the preliminary reports, and then give the mitigation reports, you know, to really get the final numbers in there and get those quotes, because here in our area, we like to use the Florida as contract. So if you can cancel during your inspection period for any reason, including my insurance is too high. So any reason whatsoever. So it's a nice option to be able to do that.
Yep, for sure.
Sure. I was gonna say I one time had a lender who was just trying to give an idea of a mortgage payment to, you know, one of our clients. And they thought that, oh, well, is insurance going to be around 4,000? But just using, you know, a local agent like myself, I was like, oh no, it's going to be more than that. And it was like about three times that it ended up being. So, you know, and right away, obviously, we want to connect our lenders to the insurance, you know, brokers, so we can get those numbers more realistic.
Very
So
important. Mhm.
yeah, yeah.
I had another question too about downstairs enclosures, which are common here, and maybe we could talk about that and maybe pre-firm homes. So you'll hear it a lot. So most of our homes are built on stilts so that they're above flood, and then they end up with these enclosure, you know, apartments, or even they might be storage or whatever it might be. Can you talk about, I guess, the affordability of it, number one, if it does have an enclosure, and the availability of insurance if it has an enclosure? Does it affect that at all?
In regards to getting insurance, it doesn't have a bearing. There is more difficulty when there's been a lot of claims. They just rolled it out, I think, a couple of years ago, where you're going to notice how many claims have been on that property within a certain amount of time. So if there's been too many claims, they'll probably make you go directly to the NFIP to get the flood insurance. And I haven't encountered that situation yet, so I can't really say. And it's a specific time frame. So you could have 20 years ago and it won't affect you. It's more recent. So that's that part. Enclosures, you know, when it's not pre-firm and it's newer than the 1975 or newer, you're not gonna really have coverage for the downstairs unless it's above flood. So that, regardless of what's down there, unfortunately, you're not gonna have coverage. You're gonna have just coverage for the structural, not anything finished. And then you're gonna have very limited coverage in regards to personal property. There's not gonna be much covered. But if it is pre-firm, it's pretty much going to be all covered. The only difference is you're going to pay a premium for it. Everything's covered in the bottom, but it's going to be more expensive. But I will say the difference in pricing is a lot less, you know, separate. Like the premiums are closer together, so it's not too much of a difference now. Let's say a pre-firm might be 6 or 7, and then a regular, you know, non-pre-firm is going to be 3 to 4, 5, you know, depending on the size. It's just right now there's just so many factors. The type of building diagram, which is basically if there's an enclosure in the bottom or not, or if there's a basement, but we don't have basements here. So there's different types of diagrams. So that makes a difference. The square footage makes a difference, which is the replacement cost. And then the maps have their own data now with the risk rating 2.0 that pretty much it's based on location. So the pricing right now is just more location based and how often that neighborhood is going to flood or not. And then you'll see the prices accordingly. But if you do have a house that doesn't have an enclosure, it's just stilts and then the second floor, that one's definitely going to have the best rate. I have one that I did a long time ago before they did the risk rating. He was paying 8,000 a year. He doesn't have an enclosure, but he was VE, so he was right on the ocean. He kept renewing it. Risk rating 2.0 came out. When they redid his, ended up being cheaper. So it went from like 8 to like 4.
Wow.
So
Nice.
then for him, he was like happy, even though he's in a VE still, but because of that location, because he doesn't have a downstairs enclosure, like it's literally, it'll have to take off all the pilings, and the chances of that happening is very slim because the water just passes right through the pilings and nothing happens in most cases, you know.
Wow.
So I guess so what you're saying is really the diagram is what matters the most. They don't necessarily look at there's smart vents and it's breakaway wall.
They'll look at those, but we're talking about minimal,
Yeah.
you know, we're talking about 100 or 2. And then this, I used to talk about this more before, but because of the difference, there's square inches. So usually you want the square inches to match the enclosure size. So if you have an enclosure of 299, you want your vents to be 299 square inches total.
Mm.
So if you have 4 vents, then you just measure them and then make sure it's over 299. If not, you could make another one.
Yep. Yep.
And then you'll get that credit. But right now, with how the pricing is, it makes a difference, but it's, you know, most people don't want a vent. So they end up just paying the couple $100 more, you know.
Yeah. Yeah. Gotcha. Interesting. That's good info. I have another question. You mentioned the replacement cost, and that's been a really big topic lately for our luxury homes. Can you talk about that limit for anything with is it a replacement value over 1 million? Are you familiar with that?
Mm-hmm. Yeah.
Okay.
So Citizens has a cap of 999,000. Anything over that, you're not eligible for Citizens. Unfortunately, once you go over that, there's pretty much only 2 or 3 companies right now. And once you go over that limit, the price just multiplies drastically. I did a brand new 2024 build that's going to be finishing next month. It's 1.5 million replacement, so it's really large house. It has a pool on the second floor and everything. But I didn't strip it down, like remove a lot of coverages. I just quoted it as is, and it was coming out to 40. So, you know, I normally warn those clients, like, if you're looking at these, you need to start your budget at 25 and up. If you're okay with that, then proceed. But if not, you know.
Wow.
So normally in those situations, people who are looking, I try to tell them, try to stay within under 3,500 square feet living.
Mm-hmm.
Usually that's like a benchmark I like to use, because once you go over, you're gonna get hit over the million for sure.
Okay, gotcha.
Because if you stay under 3,500, most of the time we could put you at that 900 something thousand coverage. Now, if you had 3,500 square feet of living and then 5,000 of balcony, I'll be like, okay, you can't.
Yeah.
Like, you need like a reasonable amount of balcony.
Yeah. Yeah.
So
Yeah.
like, it can't be like crazy features, because they require all these pictures now to verify. Like, they want to see if you have a fancy dishwasher. They want to see if you have a I don't know, an ornate staircase that's spiral, and then
$5,000 light fixture in the dining room. Yeah.
Exactly. So in all those little things, when we put them in the replacement cost estimator, they start adding up. And then we have to be accurate, because if I'm not accurate, Citizens will go in and manually add it, and then it'll go up to whatever they put in. If they mess up, then we're in trouble there. So yeah, it is a big issue in the Keys. Hopefully there's some legislation that talking about maybe in the future increasing the limit, but right now it's just a tough situation because it's so expensive. So just use that 3,500 square feet living or under. Preferably, I prefer you to be in the 3,000. because you never know how construction, how expensive things could get. They could keep going up,
Mhm.
and then now
Mhm.
3,000 square feet is $1.5
Potential.
million house. You know,
Yeah.
so it's usually that's my tips for those type of clients. And the flood, it does tend to be more expensive. On those, I've seen the flood, I go with private companies on those because the NFIP rates, they're just so much. And then I'm able to get a better price with better coverage on private. I have one in Marathon that I saved them like 2,000, so they were paying like $6,000. And then it included coverage for the pool. So if the
Mm.
pool gets flooded in a surge event, then they have coverage for that. On the NFIP, on these government policies, they're super basic. There's nothing covered pretty much except for your house, you know. So it's on
Wow.
those I could offer a little bit better, options at least.
It's just more expensive since it's a private company
It tends
generally,
to
or no?
be in line. Like if they're paying in this situation, I could remember in Marathon, I quoted him right flood. It was 8,500, and I got him a private flood for 6,000.
Hmm.
And then, for him it was a no-brainer. He was saving money. He was getting
Yeah.
covered, and the pool was covered. And I think they have like landscaping and which
Mhm.
was
Wow.
included
Can
on
be
the
so
other.
expensive. Yeah.
Yeah, and that's what always goes,
Yeah.
the
And we're talking about
officer's
a
fine,
big
the house
house,
is
by the
fine.
way. It was a really big house, like
Yeah. Yeah.
3-story concrete roof, everything, full
Yeah.
blown. So
Yeah.
for him, it
Wow.
was good.
Yeah. There's
Awesome.
so many intricacies as you can, and I bet you could talk for hours and hours and hours about all of the things.
Yeah. Some people talk with
Um,
me a lot.
I mean,
Yeah.
there's just so much, which is why, it just doesn't make sense for somebody to not, reach out to a local, insurance
Yeah.
agent.
One and that's one of the things I do want to bring up, like on the higher stuff. There's some houses that unfortunately some agents will put under citizens regardless. And I want to try to tell people to avoid that because you're going to be stuck in a horrible situation. Because if, let's say, they quote you 10,000 with citizens, they squeezed you in and it was 950,000. However, they did it. Citizens are going to look at the pictures and they're going to be like, this is a no go. We're going to cancel it. So a month later, you're going to get canceled and then you're going to have to buy the higher quote anyways. So
Mhm.
then
Mm-hmm.
what happens is, so maybe those let's say a couple months goes by and that company's closed for their exposure management, let's say. They don't want to take on new clients. Then you can't find anything.
Mhm.
So then you're sort of stuck and then you got to get force placed and nobody wants force placed, from your lender. The lender charges 30, 40,000 for something you're not even covered for.
Mhm.
So, and I mentioned that because I had that situation. I told the client she was buying a $5.5 million house. It was like 5,000 square feet, and they put it with Citizens. And I told her, you know, go with that agent. That's fine. I know the one I quoted you is more expensive, but I want you to go to that agent and ask them if they could guarantee that this policy is not going to get canceled, and see what they say. Tell them if it gets canceled, you're on the hook for the rest, and see what they say. So,
Yeah.
so anyone can manipulate the numbers, but we're getting fact checked all the time. So he
Right.
might be just closing the deal just to close the deal, but
Right.
it's gonna burn the client in the end. And I just told her, look, if you want to do that, go ahead. If something changes in the future and you need me to quote it again, then just
Mhm.
call back.
Yeah.
But it's just at least people in a pickle because you expected to, you went to this advisor and they told you this number and then it gets canceled. So you
Yeah.
thought you were going to pay 10,000. Now you got to pay 50. Your budget went crazy. Now you got to pay $4,000 more a month on
Wow.
insurance.
That's insane.
So it's like it's not that great for the client.
Yeah.
So that's why I really try to just tell people to do the right thing.
Yeah, from the get-go.
Exactly.
I don't know if Jaclyn, do you have any other questions? I know there was maybe like some hot topics. Not everybody that's listening is necessarily from Florida or has like heard of Citizens, but Citizens is from my understanding is now the only insurance provider that writes policies, at least in Monroe County for wind. Is that right?
We have another one, but the other
Okay.
one, slide just told us when I had a meeting that if Citizens is touching it, if they're offering a quote, that they don't want to compete with Citizens. Like that's not their purpose for Monroe County. Their purpose is just for the higher value stuff. They said it could change in the future, but they didn't want to do that. I will say in regards to the market overall, it is looking better. Before it used to be there's no options. Now it's like at least slide. Frontline is canceling all the policies, but they were
I had heard that.
Yeah, I've gotten a lot of calls recently about that. And we're talking about big houses. They're paying like $2,000 a year. I'm like, man, you're paying cheaper than what I paid. Like, and I have a house half your size.
Yeah. Yeah.
So what's going to happen to all those? Because the front line was homeowners and content, right?
Yeah, a lot of those clients, they have, at least half of the ones I've spoken to, they don't have a lender. So I either just sell them without windstorm or they just don't go with anything for a while. And I'll just follow up with them later.
Yeah.
But yeah, Frontline is just, they're shedding a little bit. But there is, at least in the market, more companies. So at least we see the light at the end of the tunnel now. Especially North Florida. We got Orange, we got Loggerhead. Loggerhead is a new one. They don't want to write in the Keys yet, they told us. They're only doing North Florida, of course. So trust me, we're on top of them like crazy.
Yeah.
So we're like, come on, you got to get down here. I've been really pushing, like I've been communicating with the companies a lot, even ones that we don't represent. And some of them have actually like done meetings because of what I've told them. Like I try to share what's working with other companies, with the new companies that are coming out. And then they're like, okay, well, that's a good point. We're going to bring it up to our board and talk about it. And then I spoke to them recently about it, but just there is more companies. So that's the good thing. And then hopefully those companies could just come more south. Even if they go to Miami, that'll be a good thing.
Good start. Yeah.
Just as bad here, like here.
Yeah.
Yeah.
I think I think Florida Realtors put out an article recently, but there's been a lot of doom and gloom, I think, with insurance, and numbers have increased a lot for a lot of home buyers and owners. And not just in Florida. Florida's like the number one, I think, leading state for increases, but I mean, obviously California, even, my family in the Midwest, they're talking to me about, oh, my insurance. And so it's everybody. So I know there's doom and gloom for that, but I also heard, maybe like us as a normal person, not an insurance provider, we haven't seen it, but it's happening in the background, and the effects hopefully will feel in the near future of things at least kind of like stabilizing, and like you said, being more providers, so that way we're not paying, there's only one provider, so we're paying the most. Now we have more choice, so we have options.
Yeah, more choice is always going to lead to better. We do have some more companies. They haven't been as competitive. I've been trying to quote them regardless. Sometimes I'll hit on one that they'll just love it, and then the price will be good. Like I'm doing one, I think to Tamarin or Moon Bay.
Oh, okay. The condos.
Yes, the condo. Normally I write those with Florida Family, but this one was with Orange. It beat Florida Family by like $500. The client, I gave him both options, but he wanted to go with the Orange. It is a new company, so it's like we're not sure also on the claims, but at least they're being competitive. They're not taking everything, so it's not like they're giving free policies to everybody.
Yeah.
So they're being selective on what they want, so that helps.
That's great to hear. And and maybe some of these companies are hearing that we're typically, according to firm anyway, fair insurance rates from Monroe, that we are a donor county typically, that we pay out a lot more in premiums than we ever claim or bring in, you know, I guess costs and claims. So because we are paying out a lot, and we do have really great building codes here. So a lot of our homes are really well protected with the metal roofs, the impact windows, concrete construction. So I think we're paying out a lot more than we're actually claiming.
Yeah, I think maybe in the future they might roll out some more discounts. You
Yeah.
know, there's been chatter about like a metal discount I've heard in the past. But I
Nice.
just think, you know, Citizens has a lot of issues. They're trying to get to the worst ones first.
Yeah.
So
Yeah.
it's, you know,
Yeah.
like they're
It's
not
not
worried
just
about
here.
they're not worried about the Monroe 1 million limit. They're more worried about
Yeah.
what's happening somewhere else where
Yeah.
insurance is going from like 2 to 10 or something, you know.
Yeah.
On the West Coast, I will say it's pretty bad. I've been quoting, I have some new contacts over there. It's regular houses are
Horrible.
going for 10. It's just,
Wow.
It's
Well,
and then
yeah,
they
they
don't
just had those
they don't have
storms.
the fires and
yeah.
right.
Well, they don't
Yeah.
have the wind pool like we do, where you could do Citizens Wind. So you're forced to go with a company that packages the wind together.
Mm.
And then there's not many
Gotcha.
wind only companies. So then you're stuck with, you know, this really expensive policy. You don't have much options. But, you know, like
So
you said, I don't want it to be the doom. We're like
well, and
going
it's
like
not.
this.
It's a part of, you know, it's a part of home ownership, and our, you know, world is changing constantly. Our storms are always prevalent, especially in Florida, and just different disasters that happen throughout the country. So it's always, it shouldn't be the doom and gloom. I just think a lot of, you know, we took some hit on our mortgage when our mortgages increased, but from experts have said there is a light, you know, at the end of the tunnel, and everything is cyclical, and hopefully we'll
I
kind of
think right
even out a
now
little bit.
we're going up, and then
Yeah.
other states are going to where we were a few years ago.
Yeah.
I have
Yeah.
some agents I work with from South Carolina, Virginia, Illinois, that they don't want
Yeah.
to do anything in Florida. They're like, hey, here's the client, you do everything. So
Yeah.
I talk with them, and they're like, man, we're getting hit bad over here. It's horrible. I'm like, I've been saying that for the past 5
Yeah.
years.
Preaching to the choir here.
Yeah.
Yeah.
But it's
So
such an important part of home ownership, you know. So, and you've given us so much information about insurance. Thank you so much. I know we kind of went over in time, so I appreciate
Mhm.
your time. Do we have
Awesome.
any more Q&A, Jaclyn?
No, that'll do it.
Okay.
Anybody else that we didn't get to, we can answer them later. We really appreciate, I don't want to go over the time too much longer. So really, really appreciate this. Thank you, Gabriel, for your insight and your time and your experience, and Erin for putting this together. And you're so instrumental in this, and great question asker. So thank you.
thank you guys. I really appreciate the opportunity to speak and, you know, give a little insight. I like what I do. I've gotten pretty good at it, and I like helping people. So it's definitely,
I
even
feel
if
like
they
we
want
need
to
to
call
have
me,
like
you know, they
10
want to
more of
call me
these.
and ask me
Yeah.
other questions again, that's fine.
Yeah.
Yeah.
Well, I will be posting this to our YouTube channel, BHGRE Destinations, and I'll be tagging you in there so people know how to find you, Gabe, and for all their insurance needs. And that wraps it up. So thank you all so much, and we'll look forward to seeing you. Feel free to reach out to us for any of your real estate needs at Better Homes and Gardens Real Estate Destinations or flps-realestate.com, and we are here for you. Thank you all so much. Have a good night.
Thank you.
Thank you.
Bye.